if you are a property management entrepreneur that wants to add doors, make a difference, increase revenue, help others, impact lives, and you are interested in growing a business and life, and you're open to doing things a bit differently, then you are a door grower. Door grower property managers love the opportunities, daily variety, unique challenges, and freedom that property management brings. Many in real estate think you're crazy for doing it. You think they're crazy for not, because you realize that property management is the ultimate high trust gateway to real estate deals, relationships, and residual income. At DoorGrow, we are on a mission to transform property management business owners and their businesses. We want to transform the industry, eliminate the BS, build awareness, change perception, expand the market, and help the best property management entrepreneurs win. We're your hosts, property management growth experts, Jason Hull and Sarah Hull, the owners of DoorGrow. Now let's get into the show. All right. And today we have Mo Hussein back on the show. What's up, Mo?
Hey, doing well. Pleasure to be here.
So we're going to be chatting a bit about tax strategies today.
Yes.
All right, cool. So let's dig into this. This is something that is near and dear to Sarah's heart, which is super weird.
I hate paying taxes.
she,
Fun fact. I don't want to give more of my money away if I don't have to.
I know if I see something on Instagram about a tax strategy, I should just send it to her and she'll find it interesting. Like she just gets into this stuff. So, Mo, what do you got for us today?
Yeah. Well, Sarah, you are definitely probably the first person I've come across that has actually made a comment that you actually love going through this entire process. This is, taxes is one of those things that, there's this saying, there's two things guaranteed in life, death and taxes, right?
Yeah.
So,
and
right. And
I'm trying to
unfortunately,
avoid both. So how do we avoid some of the tax?
I don't know if we can help with the death part. Maybe over time, we'll probably all be somewhat.
We'll avoid some of the death, maybe. Live a little
Right.
longer.
Unfortunately, the tax code is very, very thick. It's honestly created an entire industry of professionals like myself and other CPA firms that are specifically just dedicated to decoding it and maximizing savings with our clients and with taxpayers. In general, there's a litany of information that's on the IRS website. It's very difficult to parse through. And then there's also consistent changes that are happening each year. I think probably the biggest changes that are happening this year that a lot of property managers are being impacted by is the new 1099 filings in the IRS portal. So prior to 2023, you didn't have to, you'd be able to file your 1099s via paper. As of 2023 now, for any filers that are filing more than 10 returns, those have to be filed, electronically. The IRS has created this new portal called Iris, and it allows for you to be able to submit your 1099s electronically. And there's some changes that have happened between the fire system that a lot of folks were using before and the new IRIS system, of course, making things more and more complex as usual.
Got it. So,
of course, why would they make anything easy?
Yeah.
Right. It's definitely not the goal.
I'll be audited next year. They'll be like, oh, yeah.
That's right.
Now, it seems when it comes to tax strategies, you've got everything ranging from across the spectrum from risky, maybe not even actually viable strategies, all the way to really safe and conservative. And, some will save you a lot more on taxes on the risky side, going towards more conservative. How do you balance this?
Good question.
Find the right medium.
Good question. The interesting thing is although we're a CPA firm, we'll file taxes on behalf of our clients, and there'll be another CPA firm maybe the client was working with before that filed taxes the year before, and maybe even though the deductions or maybe other things haven't changed significantly, the return and the actual filing and the composition of it is different. And so, but it doesn't necessarily mean one way to do it is wrong than another way. There's a lot of different strategies, especially when it comes to things like depreciating assets and taking advantage, for example, of a bonus depreciation. And just give you some context, bonus depreciation was a tax incentive that was enacted by Congress in 2002. And it basically allows for accelerated business tax deduction on a large asset versus over an accelerated period of time versus over the duration or the lifetime of the actual asset. I mean, real estate is a great example of that. In 2023, you have bonus depreciation of up to 80% that can be taken advantage of, and then it drops to 60% in 2024, 40% in 2025. 20% in 2026 and 0% thereafter. However, a lot of these deductions you may not want to take advantage of depending on where your revenues are at, so you can actually minimize your tax liability. And so there's a lot of strategy around in different ways that a tax accountant or CPA will file your taxes. And so that's where we see kind of the variation. What you mentioned about kind of risky, there's certainly a wrong way to do taxes, but there isn't a right way or one way to kind of submit your taxes. And so that's why you kind of see a lot of different tax accountants and CPAs kind of have different ways and strategies of submitting their clients' taxes.
Got it. Okay. Cool. All right. Well, what are some things that property managers should be paying attention to this time of year here at year end?
Yeah.
They max this out.
Yeah. All right. So one thing that we always urge our clients is, the tax season shouldn't be an annual kind of activity or flurry at the end of the year. What a lot of folks wind up doing is nobody really thinks about taxes until after the new year, and it's February, and you're looking at March and April when the tax deadline is due for both your business and your personal taxes. And honestly, that isn't the best time that you should be thinking about it. You should be thinking about it throughout the duration of the year. You should have some accounting system that's keeping track of all your expenses. With the PATH Act that got enacted in 2015, real estate agents and brokers have some additional relief when it comes to business-related purchases. That made changes to the IRS section, I believe, 179 deduction. And so, for example, in the tax year 2023, you can expense or write off up to $28,900 of the price of a new car for the tax year in which you bought it. Now, there's certain limits of the type of vehicle that qualifies for this tax break. However, these limits are part of allowable deductions. And so if you're thinking about your taxes throughout the year, certain decisions that you'll make about acquisitions or things that you may be purchasing for the business may make a material impact at the end of the year on kind of your tax implications. And so it's important to keep kind of a log of all your receipts, expenses, and everything throughout the year. A lot of times when clients wait until February to start putting together all the prep work and the receipts and everything for their expenses, a lot of times you'll miss things. And we always suggest you should take your time and file an accurate return versus just trying to beat the deadline and not get hit with a potential fine. You do have in April when the taxes are due, but you can always file for an extension. And if there is a tax liability that's assessed, there will be interest that will be accrued during that period of time. But again, it's better to be accurate and maximize kind of your deductions versus kind of being in a hurry.
Got it.
Mm-hmm. Are there any deductions or obvious tax strategies that you would recommend for property managers or real estate agents in general?
Yeah, great question. So, I mean, some of the most common types of deductions for agents and brokers and property managers are, marketing expenses such as sales, open house signs, flyers, web development, business cards, mailers. If you're leveraging a service like DoorBro, which is considered real estate coaching and training, those are considered education costs, licensing and renewal fees. Things like association dues for like MLSs, brokerage desk fees, any type of transportation kind of expenses, whether it be automobile maintenance or repairs, gas, mileage, travel, home office expenses, and even gifts. Although there is a limit on gifts of a $25 deduction per client per year. And so there's a lot of different things that you can deduct. And a lot of times what happens is, you may be a broker or a property manager that's going to show a property and you need to go buy some flyers or a handful of flyers or something like there's some type of piece of marketing collateral. And so you may go to FedEx and just use your credit card And although at the time it's kind of registering in your head, that may be something that you forget to enter into the accounting system later. And so you're not leveraging that in kind of as an actual viable business deduction. And so this is why it's important that you're logging kind of your accounting activity and have like an easy system to use, something to use that's on the go as well, so you can easily kind of catalog and log these expenses. All these minor costs, kind of add up over time. And you need to make it count so you can kind of maximize kind of your deductions here.
What do you think is the easiest system to use?
I try to stay away from words of easiest system or things like that because it's very subjective, right? We're all creatures of kind of habit, and so some folks are kind of tethered to their phones and are okay with using a litany of different applications. A lot of our clients will use kind of QuickBooks for their expense management system, and to manage the kind of their corporate books. There is a mobile app. You can easily log things as you're going. You can connect that directly to your bank account and your credit card. And so as transactions occur, you can make sure that those are logged correctly. I would say that, having a system that has an integration to whatever banking and credit cards that you're using, and reconciling that account on a monthly basis to ensure that you're logging all the transactions. And then also keeping in mind in scenarios where you're paying kind of out of pocket for something or loaning something to the business, even though you may be the sole owner and you want to take advantage of those. There's a lot of different pieces of software that are out there that can help with that. What we usually suggest for clients is, if you're already using some type of a property management and accounting system to manage your business, let's say like Appfolio, there is a way to also manage your corporate books. A lot of these property-based accounting systems also have the ability to manage your corporate books, and it's not only specifically for real estate. They're an accounting system at the end of the day, and you can just create kind of things like a fictitious property labeled your corporate business and run all your financials and keep track of your financials that way.
Now would be a really good time to send a reminder to property managers that your property management software is probably not the best software to do your internal accounting. So a lot of times clients are like, oh yeah, I have software for that. I use Rent Manager or Appfolio or Buildium. And that's fantastic to manage your clients' accounts, but it's not the best system to internally manage your accounting. It's not going to have the same functionality as something like QuickBooks would.
But you're saying that's what they do. They use
a lot. That's what they do.
What I'm saying is that, so these accounting systems, so the main difference, so if you think about something like a QuickBooks, it's a general accounting system. So it's meant for any business. The chart of accounts is very malleable, if you will. Something like a property-based accounting system, there is no such thing as like a business. There's a property, there's tenants, there's owners, there's vendors. Now you can finagle or kind of manipulate and come up with workarounds so that you can manage your books there. However, you'll have kind of an entire different chart of accounts for your corporate business, which will be different than what shows up on the financial for your owners. And so there's kind of a trade-off. You can use another system that's maybe tailored specifically to your business, like a QuickBooks, and you have the flexibility of things like integrating credit cards and stuff, which is kind of a nuance when you come to property-based accounting systems. But then you have to manage two different platforms, or you can figure out some workarounds and try to manage and keep track of your financials in one of these property-based accounting systems, but then have to keep in mind about some of these workarounds, like reconciling like a credit card, which isn't the same thing as reconciling like a bank account. But so there are kind of trade-offs. But I think what's most important is, what we say, kind of having a single source of accounting truth. I think that's probably one of the biggest things that a lot of businesses kind of struggle with, especially when it comes to tax season, is like, oh, I have a bunch of receipts and stuff that are in my inbox. I have some screenshots on my iPhone. I have, this random Google Drive folder with other information. I need to call Sally, who's my, maintenance supervisor or whatever, about some other transactions and stuff. And there isn't kind of a single place of accounting truth. And having that will definitely save a lot of time, especially when it comes to prep.
I would think that grown-up property managers are probably at least using something like QuickBooks, because at some point they really should be on the NARPM standard accounting, standard of accounting, chart of accounts, and they should there's just some advantages, especially if they're wanting to exit that business someday. having clean books that are not commingled with your client's stuff inside AppFolio, for example, would make your business a lot more appealing, and you probably fetch a prettier penny. So,
and I think a lot of times people think, oh, well, this is an accounting software because it does all of the accounting for my clients. And there are differences for sure between how your PM software and how something like QuickBooks, doesn't have to be QuickBooks, but we use QuickBooks. I like it and I can use it, and I don't like technology. So something like QuickBooks functions. There are differences. And the other thing to keep in mind is if you have a team and your team has access to your property management software and you're putting all of your bookkeeping and accounting and financial data in there, your team has access to it. And you may or may not want that. Some people might be very open and they have an open books policy and they don't care at all. Some people, they hear that idea and they go, there is no way I would do that. So if you're one of these people who's using your property management software as your own internal accounting system, you might want to think about doing that maybe a little differently.
I think this is where there's a challenge in business and in this industry, that a lot of business owners don't recognize the differentiator between all these systems that you need in order to run a business. You definitely need something like Propertyware, AppFolio, Buildium, Rent Manager, Rentvine, whatever, as a back office and as a billing system, as the main system for, getting paid, basically. And then you need an accounting and financial system. And those are different. The accounting and financial system, you need a system for how to manage money, how to do finances. So for example, Profit First is a nice baby step for a lot of businesses that are just getting started and have Frankenstein accounting, as Mike Michalowicz calls it. And then you need a sales CRM system, which is usually very different than the CRM, which they're calling their back office, where it's focused on bringing clients into the business. They're like, well, I have a CRM, it's AppFolio. That's not the same thing. And so, and then there's several other systems that you need in a business: process system, planning systems, et cetera. So when people start to think that they have a one system, they're like, well, I've got AppFolio, so I've got every system I need. This is where they struggle then to be able to scale their business, because they don't have the knowledge, the insights, and the transparency that they would need in order to get to the next level. And they don't have the right tool to do all these other jobs. It's not the Swiss Army knife. And what's funny is I sometimes equate this to like the little multi-tool that a handyman might have on his belt.
Yeah.
If a handyman shows up with only a multi-tool instead of a toolbox to do a job, the property manager is probably not going to call that guy back, right? Oh yeah, I've got a hammer. It's right here. Right? It's not the same. It's not the same. And so the same thing in business. You can't just run it off of one system. There's no magic one system. Everybody has to build a stack of tools. I'm sure in your business, you have a stack of tools that you use as well. You don't have just one system, right?
That's right. It's all about using the best tool, to get the job done, right? It goes back to the example that you mentioned about the handyman. At least when it comes to business, it's a huge opportunity cost when it comes with time. And so, you're going to pay for everything in business, whether it's going to be in time or in cash, right? And so, and where you kind of take shortcuts on, investing in certain systems, you're going to pay for it in the amount of additional time it's going to take for workarounds and manual things and processes, which is also another point, brings up another point that we always kind of stress to our clients, is always kind of consistently kind of evaluating the business and your processes and the tooling that's being used, so that you can constantly, as we say, evolve forward.
Yeah, it's interesting. I had a mentor and he taught me this concept he called the 5 currencies. And basically there's 5 currencies you have to invest in life and in business. And it's time, energy, focus, cash, and effort. And what's funny is you get early on stage entrepreneurs that I think are trying to just avoid cash. They're like, I want to be cheap. I want to not spend money. And these are the ones that struggle to grow the most, because they don't understand that their money is something that you can renew and earn. But time, as far as our life goes, is the scarcest resource. And what's really crazy to me is that our team members, we're buying their life. We're buying chunks of their time. They're trading time of their life for money. And they're trading probably the cheapest commodity for the best, right? Or they're trading the best commodity for the easiest to get, it seems like. But that's where they're at. And so as entrepreneurs, our goal is to move beyond just giving up our time and to get money. And we can invest more effort, we can invest more focus, we can like limit the stuff we're focused on to grow faster. But in business, same thing with these tools. If we think we are saving money by only using one tool, we've got our crappy multi-tool instead of building the ultimate stack, then usually they just end up spending more on payroll. They're just having to buy more time to do less stuff and get less stuff done. So technology is a lot cheaper than people. I'm sure everyone listening realizes that, but
I think, there's a difference in business when you're looking at things from the lens of like a perspective of an expense, versus looking at the total cost of ownership for a particular solution or process or something like that. And so, and in that regard, you can actually, assess the amount of time that's wasted. And there's always going to be some opportunity cost. If you are a business owner, nobody gets into real estate because they want to do accounting or because they want to work on taxes and whatnot. And so there are professionals out there whose, sole service and focus and business models is focused on that. And so, and that's not something that's going to differentiate you from your competition. So those things that are not going to differentiate you, those are the things you should be outsourcing and the things that you should be seeking help to take off your plate so you can focus on the things that actually drive your business forward and allow for you to be able to grow your portfolio.
Yeah, for sure.
All right.
I'd like to, now I know this won't be the same for everyone because taxes is this crazy like mishmash of information, and what works for you might not work for me and vice versa. But knowing that there's no one size fits all here. So we're not shopping like off the rack. This is all tailored. So what are some strategies that property managers should at least look into? Now, it might not make sense for everybody, but what are some things that they should at least look into and see like, hey, does this make sense for me to implement this?
She's hoping
what
you
are
say
some
things
ways
like the Augusta
I
rule.
love learning, right? So I love learning, and especially like how I can save money on taxes. So how can a property manager, what are some ways that they can look into and see if it's right for them, reducing their tax liability?
Tax liability. Yeah, no, great question. So, there's one of the biggest nuances or just kind of things in accounting is that, there's no such thing as being a creative accountant, right? That's why we have GAAP and what happened to Enron. So there's always a right way to kind of do things, but there isn't just one right way to kind of structure your business. And so one thing that we see a lot of clients kind of struggle with is, they'll create a business. Initially, most folks don't start off in property management. They either own a brokerage firm or they're an agent and whatnot, and they're doing actual real estate sales. And then they'll try to, get into property management, and maybe they have they're doing in-house maintenance and whatnot, and maybe like a leasing only service. And maybe they also have assets on the side that they own themselves. And one common
pitfall, right.
Right.
Yeah. They're like, I do all of these things.
I do all these things, but they're doing it all under one entity. And so it's like, hey, you should have a separate entity, an LLC. I mean, there are liability reasons or mitigation for liability that you want to do this. And also there are some potential tax benefits. You can have like an actual main corporation, and you can have a sub entity or an LLC that's your brokerage business, a separate LLC that's the property management business, a separate LLC that's the leasing only business, a separate LLC that's the maintenance only business. And that, for example, that corporation can tax each of those sub LLCs like a licensing cost just to be able to actually use the name. Of course, it may be the same ownership structure, but that's a potential way of having a tax savings. A great example is you have like the largest companies like Apple and Nike and stuff like that. They have separate entities that are outside the U.S. that tax licensing fees just to use like the check mark with the entity that exists that's actually transacting with the customers. And then the other benefit of having all these entities that are separated out is that if you ever want to have a portion of the business that you want to sell, you can demonstrate what the profit and loss looks for that business, and you can have a separate valuation metric for that particular business and spin it off. especially if you have assets of your own. You want to have that in a separate entity because you'll be able to take advantage of like bonus depreciation. And that bonus depreciation essentially allows for you to be able to, take a rental property and take an immediate first year kind of deduction. If it's in 2023, you can start at 80%, and whatever the bottom net loss is on on that particular asset or that particular business that owns that asset, that can now be offset the excess income that's liable to taxes to offset against another entity. And so there's some strategies around that. There's also ways to be able to, loan a particular asset, or like, for example, if you have a car, you can rent it out to one of the entities, even though it may be the same individual that's using it. There's a way to kind of structure your taxes so that, even if you own the property, you can technically lease it to one of the other entities, and that can be a business expense and write off against one of your other entities. And so there's a lot of like kind of like small things like that can kind of make a material difference when kind of collectively put together. But what we suggest, and something that we don't see too much, and usually we see a lot of clients struggling with, is rather than having all your different enterprises and your sales activities, just revenue generating activities wrapped up into one entity, to kind of separate them out based on business lines. And this also gives you as an owner perspective on like what is working, what is not, what needs help and attention and things of that sort, and be a little bit more prescriptive and data driven in how you make those decisions.
Like that, for sure. Yeah. And then it's different P&Ls to see, hey, what part is actually profitable here, and what part, if any, is taking a loss. So, where does my attention actually need to be? Because what makes me the most money, instead of going, well, I think this looks pretty good.
Yeah.
Right.
When things get mixed up, people make bad decisions. It's funny because just for example, we'll get somebody that says, oh yeah, I'm getting plenty of leads, and they're spending thousands and thousands of dollars on internet marketing. And I'm like, cool. But then we ask, and they justify it, but I say, where are you getting the leads from? And the majority are word of mouth. And so they're spending a bunch of money. And I'm like, cool, let's separate this out. What's your acquisition costs on ones you can attribute to the internet marketing stuff you're doing? And sometimes they're like, oh yeah, it's like $3,400 a unit to get on a client. And I'm like, that's ridiculous. Right. And then they're like, cool, I'll sign up for DoorGrow. So I'm curious about the education costs and here at the end of the year. How do we help people justify signing up with DoorGrow, leveraging education costs and getting that tax deduction?
That's such a good question, because that's R&D, research and development.
Yeah, it is. Yeah, real estate coaching, training, and education costs is considered it can be considered a deductible expense. At the end of the day, especially a lot of the insight and kind of value that you guys add to the community is something that I think is priceless. And, if it's going to make a material impact to a client's kind of bottom line, the thing is that none of us can be experts in everything, right? And so kind of the reality in business is you can learn in two ways. You can either learn from somebody else's mistakes or learnings, or you can learn them, the hard way yourself. The latter is going to take more time, which you're not going to get back, right? And so the folks that are able to accelerate and kind of grow their business take advantage of like coaching and training and educational type of costs. So I would say, how do you kind of justify that expense at the end of the year? If you're going to have an excess of income, that's going to be tax liable. And so and these educational costs are write-offs. And so you might as well invest, and instead of giving that money to Uncle Sam, give it to Uncle Jason. And find a way to maximize and grow that kind of that ROI. I would say that's probably something that a lot of novice kind of entrepreneurs don't probably put too much emphasis on when they're kind of first embarking on their entrepreneurial journey. It's just the importance and the significance of education and insight, and especially from those that have blazed the path before you or have exposure to a lot of other folks that are in your same shoes.
It really is probably one of my greatest secrets in how we've scaled and built DoorGrow, and the success we've had is once I finally stopped being the idiot that thought they could do everything and watch all the videos on YouTube and read books and figure it out myself. I started to collapse time significantly when I got coaches and mentors. And we shout a lot of money to coaches and mentors. And I've got some amazing ones right now, like really amazing coaches and mentors. And what it does is, yes, I'm spending more money, but I'm decreasing time. So it's collapsing time for me significantly. I'm making a lot less mistakes. I'm not having to figure it out, because every stage of business, you're stepping into the dark. And it's nice if somebody's already been there before you, because they're not in the dark about it. So they're like, oh yeah, just do this and do this. I've already tried that, and it doesn't work. I was like, that's what I was going to do. And the same thing, the majority of the people that come to me are like, I'm having trouble growing my business. And they're like, I'm like, cool. What have you been trying, or what are you planning to do? I'm at the startup stage. They're like, I'm going to do internet marketing and SEO, pay-per-click. They're going to do everything. All the biggest companies that they're competing with are already spending way more money than them doing, and they're just going to do it worse. And that's their strategy. I'm going to do what the big companies are doing, but worse. And I'm going to try and charge less money. I'll be cheaper, and I will somehow provide better service. And I'm like, good luck with that. Right. And so we don't know what we don't know. And we make mistakes at each stage. And the secret to collapsing time is to spend money and invest in yourself, because you get that back. There's a big ROI. All right. Thanks for helping us sell DoorGrow. I appreciate it. All right.
So if you're looking for tax write-offs at the end of the year,
sign up with DoorGrow.
we can help.
Yeah.
And we'll help give your money to the government.
And then we'll help you make more money. Like nobody stays with us unless we're helping them make more money. The government is not going to
help you make more money.
Yeah.
They haven't helped me yet.
Their
anyway.
taxes are not giving you an ROI.
Next year. I'll be audited. They're like,
Another thing that I wanted to comment on, actually, that a lot of people may not be aware of, is between the COVID period of time, there's Biden had released this new initiative to be able to give back payroll taxes. And so if you had full-time employees, between 2020 and 2021, I think it's up to like $25,000 for each employee for each year, that you can potentially be entitled to up to that amount. And so if you had full-time employees in that, and that's free money, it's not free money. Technically, those are payroll taxes that your organization already paid, but the government is literally just giving back to you as part of this initiative.
Take your money and
I'll take my payroll taxes back. That sounds great.
Right?
Yeah. The requirement is that you kept people on full-time payroll during the 2020-2021 year. And that those folks were with you for at least a year, and that those were actual W-2 employees, not 1099.
Okay. Well, that's worth talking to our accountant about. Oh, yeah, she's up on all this. I don't know.
Did you think I would have missed
that? Okay.
I'm telling you, I'm like,
what else? She has some strange hobbies. All right.
I do. I know.
Well, Mo, this has been really interesting. I appreciate you coming and hanging out on the show. So why don't you tell us a little bit about your company and how you can help people with some of this stuff if they're listening to all this going, man, this is a bunch of gobbledygook. I really could use some help making this all make sense. And I thought AppFolio was an accounting system for my business, and they're just trying to figure it all out, right? How can they get a hold of you?
Great question. So before I comment on that, one thing that I do want to kind of the misconception of like, hey, just because you bought accounting software doesn't mean you bought accounting experts. Okay, so
right.
Oh, that's so good. I'm going to use that.
The experts are worth a lot more to me than the software.
They are, and usually they'll be priced a lot higher too, because the software is
not
the proper application of it. It's like buying it's like buying a seesaw or hammer or some tool. It's much cheaper to actually buy the tool versus buying or having the expert that's actually going to be utilizing the tool to build whatever.
Yeah, the peace of mind to me is priceless. So
it is.
The experts.
So I lead a consulting group, Balanced Asset Solutions. We've been over for a little bit over 7 years. We are a CPA and technology advisory firm, assisting clients with accounting, CFO services like taxes, acquisition, disposition strategy, software implementations. We're partners with a lot of the accounting systems like Yardi and AppFolio and Propertyware and Buildium. We also help with Department of Real Estate audits and forensic accounting, custom reporting, fund management. We're here to help kind of maximize the value out of your subscription, streamline your business with technology and software, and give you time back to spend on the things that matter to your business, which is growing kind of your top line and working with your tenants and owners. We have clients in over 35 states. We have kind of deep expertise when it comes to trust accounting and GAAP, Department of Real Estate compliance representation. So consultations are free, and you can find us online at www.balancedasset.solutions.com.
Man, that's an awesome combo. Nerdy accountants. Everybody
Yeah.
needs those. That's like the best combo ever, right?
Yeah, that's
Yeah.
right.
All right, super cool. All right, so hopefully some people are reaching out to you right now when they're watching this, and we appreciate you coming on the show.
Of course. Thank you so much, Jason. Take care.
All right, take care. If you are a property
Bye.
management entrepreneur, you're wanting to grow your business, reach out to us at DoorGrow. We would love to help you out. You can check us out at doorgrow.com and join our free Facebook group at doorgrowclub.com. Bye, everyone.